How's it going, everyone? Welcome back to another episode of the Shawn and Matt Show. My name is Matt, that is Shawn, and welcome to our show. Shawn, in today's episode, we're going to be talking about whether you should renovate or sell as is. Going to adjust my chair so I'm
come up there
taller than Shawn, or at least the same height as
so
Shawn.
big today.
I know. Oh, there we go.
All right.
Shoulders same height. Look at that. All right. So age-old question: should you renovate before you sell, or should you just go ahead and sell as is, because the market is so darn hot? So that'll be the first topic. The second topic will be desktop appraisals. This is an amazing feature that we have at our disposal, Shawn, but is it actually a good thing? And is it hurting buyers actually by using desktop appraisals? So we are going to expose the desktop appraisal. And then our third topic is going to be Dubai real estate. You know, we've talked a lot about different real estate markets in the past. We haven't talked much about Dubai real estate. I had a buddy that just got back from Dubai, just over there visiting. Have you been to Dubai?
I have not, no.
Neither have I. Kind of like the Vegas of the, I don't want to call it Asia. Is it Asia? Vegas of the middle of the world.
Middle East, yeah.
Yeah, Vegas of the Middle East. Middle East, thank you. It's not Asia. But like Asia does stretch like, I mean, half the world is Asia.
Yeah.
So I don't.
People, you say Asia and like Russia is Asia, right?
Right.
I mean, like that's the weird thing. You don't think
so.
about that
There
way.
are projects in Dubai that are selling out years, Shawn, years in advance.
That's crazy. Let's talk about that.
We're gonna do it.
Yeah.
Don't
right.
you?
I'm
don't
not going
you
to say
wait.
anything
We're
yet.
gonna do it. So let's start off with instead of Dubai real estate, we're going to start off with something a little more close to home, and that is whether or not you should renovate your property before you sell. And when you say you renovate, some people think tear open the kitchen, do everything in there. Other people think, install a new light fixture, Shawn. So how do you approach that question with the seller, whether or not to renovate or to sell as is? What are you looking at in terms of ROI? And when does it actually make sense to sell as is instead of putting in, money, effort, work, time to renovate and upgrade the property?
I mean, I always think that you should be putting something into that property before you sell it. 9 times out of 10. I mean, there are some properties that are they're ready to go and you don't have to do anything with. But for the most part, there's something that's going to need painting. There's something that you're going to probably have to caulk around certain areas. There could be some wood rot in some places. And when you're looking at buyers that are paying attention to detail, or and honestly, it doesn't matter the market. I feel like even in a hot market, you should do something. And I think you came up with a really good number. It's like, hey, you should probably spend like, what was it, half a percent? Half a percent of what your value is worth, or your property is worth. So, if you're selling a $500,000 property, you're probably going to want to put $2,500 into your property. I think that's a good little thing there, because we should be painting minimum. If you look at your property right now and you go through and you take all your stuff off the walls, or you have a stager come through and stage the property, there are going to be walls that need to be painted. There's going to be touch-ups that have to be done. If you don't do them, it just makes things look like, there's no attention to detail. And so buyers are going to notice that. And when should you not renovate? I think you always should do something. Even if you have the worst property out there, and sometimes when you have the worst property out there is when you really want to do it, right? But a lot of people don't have the money to do it. And that's probably when you don't have the cash, or you're not willing to do one of these companies that will pay for it all up front and you just pay at closing. You might want to just sell it as is. But personally, you're always leaving a lot of money on the table if you're selling it as is.
Yeah, I think you nailed it with when to sell as is. First of all, is if the property is completely disheveled, maybe you've inherited it, maybe it was passed down or something like that, then I mean, maybe you just can't stomach doing like a 3-month renovation to completely essentially flip a house. I mean, that's the first reason. And then the second reason is money. I mean, yeah, we're talking like $2,000, $3,000, but let's say you inherit a $800,000 house that has deferred maintenance and it needs this, that, and the other. Now, there are companies out there like Curbio. You sign up with me and Shawn, and we can hook you up with a company that will renovate the property for you with $0 out of pocket, and then that money is taken out from proceeds. So essentially you're not paying for renovations. It's just being taken out of the final number. So that's definitely a possibility, but that also adds time into the equation. And, we all know you can pay with money or you can pay with your time. And, if you take that route, you're paying with your time. And, if you're inheriting a property, depending on what the siblings want to do, maybe you need that money immediately. So I think selling as is kind of like a final straw, if you will, of like the last case scenario. You should always put a little bit of money into the property, because think about it. We don't just live in properties that are ready to sell. You don't just come home and be like, yeah, tomorrow would be a good day to put it on the market. It's like, no, there's a lot that goes into getting the property ready for sale. And if you think that your property is just magically ready with just some decluttering, well, get an extra set of eyeballs in there to see what needs to be done. Hopefully, not a lot, but even minor things like changing the color temperature of the light bulb, Shawn, or changing the brass handles to a brushed nickel, things like that, where it's like, oh, who cares? The house is $500,000. People care. And they wonder, if you didn't change this, what else aren't you changing?
Well, that's right. You hit on a few things here. I think number one reason you wouldn't want to renovate was when you inherited a property and there's like 5 different family members that say, oh, they all have differing opinions. That's when you're just like, all right, cut the cord. Let's
that would be a disaster.
That would be a disaster.
Just get rid of it.
But it doesn't matter the market, guys. You have to do something. And a prime example is one that we just sold. And our clients had just renovated. They just painted. And then they said, hey, Shawn, can you come through and let us know what else we need to do? And I was like, sure. And I went through and I was nitpicky, right? And I said, all right, we're going to change every door handle in this place. And they were like, really? You think the gold ones need to go? I'm like, yeah, they need to go. We replaced it. It was like $400, completely changed the look. We turned them all to black handles. And people were like, wow, it looks so modern in here. That and light fixtures, right? You change out those old 80s, 90s light fixtures and you put them in something relevant. And it completely changes the way the property looks. And of course, lighting, making sure it's nice and bright in there, because it's so funny when you go through properties and people just like, they live there and there are 3 different colored lights. Like, that drives me crazy. You have a bright one, a yellow one, it's like, why are you living like this? Just look at where you live for 1 second and do something.
Savages living with 3 different color light bulbs.
Savages. But the reality is, another thing you pointed on was deferred maintenance. There are so many people that don't do anything. They move into their property and they live and they don't do anything. And I'm the type of person that's like, I walk through my house and I'm like, oh my gosh, I can't take this anymore. I can't stand it. I'm always looking at, like, right now, the thing that's driving me crazy are my hardwood floors. And what happens is, in the winter, I have a couple HVAC systems in my house and it gets really dry and it shrinks these floors. And, my house was built in the 1930s, the original structure, and then it was added onto. But I definitely have some waviness to my floors, right? So you have some settlement and, that's what's going to happen in these 1930s houses.
How do you not have that? Like, do you have a furnace humidifier, or like, how do you avoid that?
Yeah. So I installed a humidifier, a steam humidifier on my one HVAC, which is the lower 2 levels. And it's never worked right. It's never freaking worked right. And I'm like, what do I have to do? So I called the installer. He, of course, never called me back. So, like, getting a good HVAC tech is really important. And I found one. This guy is amazing. And he went through it and fixed all the things that needed to be fixed. And he's like, oh, this guy didn't even put the proper blah, blah, blah on it. And so I'm hoping that when he comes back to install the new filter in it, that it all works good. And I'm hoping that my floors don't shrink as much as they have been. The other thing you can do for that is just install, just get the small humidifiers. But honestly, they don't seem to be working that much. They will all come back in the summer when it gets really humid here. But it's those little things that should drive you crazy in your house that you should be fixing. You know that house better than anybody else. But the thing is, other people have different eyes and they're going to be paying attention to detail. So spend the money. If you spend $4,000 on a $900,000 property, you're going to get a lot more offers and a lot higher in that property value than if you didn't do that.
Yeah, all I can say is just do your homework. Like, it'll be an inconvenience, right? It'll be an inconvenience to get the property ready. It'll be an inconvenience to get to live in the property, while it's being shown and whatnot. But it should be, because if it's easy, if you don't have to do anything, then something's probably not right.
That's right. Yeah. Take the time to do it. It pays off every single time, especially in a high market like this. Especially in a market like this, you're looking at the difference between 2 offers and 8 offers. And honestly, if you just pay attention to details, you will get those 8 offers. You're going to get a lot more.
Let's move on to our next topic. This is about desktop appraisals, Shawn, and whether or not desktop appraisals are actually beneficial, or if they're hurting the real estate market. And first of all, Shawn, for the people out there that maybe don't know what a desktop appraisal is, or an appraisal waiver, can you just give a quick 30-second rundown of what that is?
A desktop appraisal is where the appraiser, so normally an appraiser is hired. They're a separate entity from the bank that's hired to go out to the property, to go inside the property, measure, make sure that that property is of value. So contract price, they want it to appraise for at least contract price or higher. And the reason the banks hire these people is to make sure that the money that they're giving to you for this property is secured by that investment. An appraisal waiver is when the bank says, hey, I don't need any appraisal because you're putting enough down on the property and your credit score is high enough, and we feel like the property values in that area are good. We don't even need an appraisal. That's an appraisal waiver. A desktop appraisal is when you say that appraiser doesn't have to go out to the property. We will do it based on pictures or based on a floor plan. They never set foot into the property.
So they're essentially the same thing, desktop appraisal and appraisal waiver. It's essentially, hear me out on this. It's the lender saying, we're good.
Yeah. Basically, we're good. Yeah. The desktop appraisal, I think they're still looking at things and they're still coming up with a value possibly, right? But the appraisal waiver is, hey, we don't even need to do anything.
What I am getting at is between the desktop appraisal and appraisal waiver, these are 2 completely different things than the appraiser actually going out, knocking on the drywall, measuring things, and walking through the property. And
right.
For the longest time, I've advocated for desktop appraisals and for appraisal waivers, and I'll tell you why here in a second. But I was scrolling on the old TikTok the other day, and real estate agent out in, I don't know what state, but it was a state where homes are selling for $150,000, $200,000, was talking about the appraisal process. And she got a client, let's say, under contract for $150,000. I'm just ballparking what the number was. And the appraiser went out there and appraised it for $140,000, basically under the sales price. And the buyer was like, okay, well, I guess I'll just, cover the difference. And the real estate agent was like, no, your house isn't worth that much. It's only worth $140,000. We're going to save you $10,000 here, and you're only going to pay $140,000. They went back to the listing agent, back and forth negotiations, and ended up saving them $10,000 and them only paying, I think, $140,000 instead of $150,000. So it got me thinking, if that was just a desktop appraisal or appraisal waiver, then that specific buyer would be paying $10,000 more than the actual property. So Shawn, the whole reason that we're talking about this, in my opinion, is because the appraisal process is so backwards and it's antiquated and it needs to be completely redone. But is the desktop appraisal actually hurting buyers by essentially skipping a step in the lending process?
Well, it could be hurting them because, all right, I mean, desktop appraisals and appraisal waivers, the reason that would be good is when you're in a market like we're in and people are waiving that appraisal. And if you get an appraisal waiver, then, and you've waived your appraisal, then you're not in worry of anything happening to that loan or you having to come up with more money or anything like that. That's where an appraisal waiver or a desktop appraisal can be really good. Where it can be bad is you don't really know what the opinion of value is on that property. So they're not looking at comps. They're not looking at the square footage. They're not going into the property to measure it. Where this could become an issue is when property values start to fall, okay? Or just come down a little bit. and I think with a desktop appraisal, a lot of times they require a minimum down as well, like 10%. But right now we're in a market that's pushing up. But when that starts coming back down, and you've essentially overpaid for the property, now we're looking at values below what should be, right? What the bank is feeling comfortable with. So I think why they're becoming more prevalent is because we're in an increasing market, and we can't keep up with it. But what happens when it's a decreasing market? You better be sure they're probably going to be going back to those properties.
Yeah, my whole thing is, why are we putting so much power in the hands of one appraiser with like a ruler? Why is this the person, man or woman, in charge? You know what?
Right.
I would place my buyer who stays up till 3 a.m. studying Zillow and reading articles on property values. I'd place their expertise over an appraisal's expertise, who is like, oh, well, the half bathroom adds $10,000. Like,
yeah.
Who is this one person that is going to tell the spring market that the house isn't worth what my buyer's paying for it?
Well, and that's another thing. Sometimes my buyers obsess, right? They're obsessing about that little area that they want to buy in. So of course they're going to know it better than me, better than anybody, because they're obsessing. They're knowing every detail of every sale in there. So you're right in that regard. An appraiser, I lost my train of thought. I had so many things going.
Yeah, I just don't understand the appraisal process. If the buyer wants to, you got the
here it is. Okay. I didn't eat today, man. I'm starving.
Yeah.
Here's the thing with appraisers, and this is what has driven me crazy for a long time, is that appraisers are under pressure by banks, right? So the thing is this the true assessment of their opinion, or is it coerced, or is it pushed back by a bank, right? Because the appraiser has a license, and if they are not abiding by the certain rules that they're supposed to follow, or they're also getting pressure from underwriters, right? So the underwriters are that appraisal goes to that bank, and then it has to go through an underwriting process to make sure that the underwriter agrees with the appraiser's value. So really, it's the bank that's going to say whether that appraisal was done correctly or not, right? And that's what always drove me crazy is like, listen, that guy's given his opinion of value based on the measurements that he's taking and based on the comps that are in the area. But then there's always going to be a third party that's going to say, nah, I don't think you're right.
You ever sold a property for like $535,000 and $500? Like, where it's just this random number, and then you get the appraisal back, and it's that exact number.
$500.
How bizarre! How bizarre!
Yeah, and that's the funny thing is there's no great way of doing this, and Matt has a great point about like, why do we even need them? When a buyer wants to buy something and a seller wants to sell it, what do we need an appraisal for? Do we need an appraisal for cars? No, you just buy a car, right? Why should it be any different for a house? It's because it's a high dollar thing, and there's a bank that's giving you the money. But like, so they are with a car. Some cars are very expensive. So
well, it's like, don't hate the player, hate the game. I don't necessarily dislike appraisers. I dislike the process of the appraisal, and then I just take it out through YouTube videos on appraisers.
Yeah.
But if a bank is willing to give you money and you're willing to pay that amount, and with the desktop appraisal and the appraisal waiver, because that's how this conversation started, these are individuals that are putting 10 to 20% down. So I want to make that clear. It's not just like, oh, you're putting 0% down on $1 million property. Screw appraisers. You don't need them. No. Like, I don't think either of us are advocating for that, because we don't want to get people in financial trouble. It's more so these people are well qualified and overly qualified to purchase these properties. They're, they have some net worth. Why do we even have a middleman?
Yeah. I mean, it's a tough, appraisers has always been an issue. It'll always be an issue. Putting 20% down is one thing, 10% down. When you're putting a lot of money down, why should it matter? Man, I don't know.
Well, that's a little thought-provoking question for the day. Let us know what you think in the comments section below on your thoughts on appraisers. With that being said, let's move on to our third and final topic today. This comes to us from businessinsider.com. It has the world's longest title, so I won't read the whole thing. Essentially, luxury projects in Dubai. Why do they even say luxury projects? Just projects in luxury, Dubai are selling out years, Shawn, years in advance, and record-setting to start the year off 2022. Dubai recorded more than 11,000 real estate transactions in January and February, a record for the city. And a lot of these are what's known as off-plan properties. I don't know if we have that term here, off-plan properties. Essentially, projects that have yet to be constructed. So new construction, new development, if you will. And to give you an idea, there are properties that are due to be completed in 2024 and 2025 that are selling out in a day, allegedly. Projects 3 years from now selling out in a day. Essentially, high-rise communities on the beach. You know, I guess everything in Dubai is almost on the beach, or if you're not on the beach, you can just create your own beach in Dubai, and then you're on the beach. So, Shawn, I mean, we talk about properties here going above listing price, but that buyer is moving into that property like 30 days from now or 60 days from now. How would you like it if you're buying luxury real estate and your move-in date is Q1 of 2025? What are your thoughts on Dubai selling out like this?
Yeah, you got to be careful on these. Granted, these people have more money.
I don't think
they don't really care.
I don't think anyone's going to shed a tear over their property values going down.
Yeah, but let's pull it down to a normal level, right? When you're buying a property that far in advance, or you're putting a deposit on something that far in advance, I've done this. I've purchased a property where I was buying it as an investment. It was in the magical time frame of that 2006, 2007 time frame. And guess what happened? I mean, you know, the market rate now is great, and the market in 2 years could be awful. And so you're essentially you could be gaining value, right? And that's what we all hope for. We're all gambling on is the fact that the market's going to keep going like we are seeing right now, right? Right now, we're seeing so much increase in value. Of course, you're going to say, oh man, it's going to be worth $150,000, $300,000 more in 2 years. Of course, I'm going to buy it at today's price, right? But that can change so quickly, like we've seen in the past. So yes, this can be a great thing, but you're betting 50% chance that it's going to be basically the same or lower, or it's going to be higher. And so there's risk involved. So make sure that if you're doing something like this, that you know the risks, and that, you know, when you go under contract, you're going to put a deposit. That deposit, you walk away, you can walk away from that deposit. And they're probably going to be asking a huge amount for that deposit. On top of that, you can get sued. So the deposit is usually not the limit of your liability. So be careful on buying something in advance because you think the property value is going to go up.
Yeah, I was in downtown St. Pete recently, and I visited a new construction condo there. Immaculate condos starting at 1.1, working their way up to $8 million for the penthouse. And the sales center was right across from the site, and the site didn't even have a hole in it. Yeah, like there were some, you know, pickup trucks and, you know, dump trucks on the site, but it was just a grassy little plot of land in the city. And I asked the sales agent, hey, when is completion? And they're like, 2024. I was like, oh, that's far away. And she's like, oh, sorry, I meant 2025. And I'm like, oh, okay. How many have you sold? And I think they've actually sold like a fair amount, maybe like 10%. I hope I'm not like underselling how much they've sold, but people are buying them there. But in Dubai, it seems like it's that on steroids. So reading from the article, this is a massive opportunity for investors finding a good off-plan project, looking ahead 2, 3, 4 years, looking at where the market trajectory is going to be, and hopefully making the capital appreciation on these purchases they are making today. And the values of Dubai real estate risen nearly 22% since the pandemic. I think we could look at most metro areas and come up with a number of how much things have risen in metro areas. And it also says that there have been a lot of interest from Russian buyers. Now, I've looked into visiting Dubai and just learned a little bit more about the culture. Everyone who is in Dubai is not like a Dubai resident, right? It's like
Right.
the actual residents are so small, and obviously a large expat community. And there's a lot of Russians that live there or that travel there even before everything that broke out with Putin's war. So they're saying that a lot of Russians are coming over, and even a lot of Ukrainian buyers are coming over. So this may be kind of like a melting pot for, the Asian and Eastern European buyers who want to park their cash somewhere because, in addition to Dubai having luxury real estate, it was also placed on the gray list for money laundering. So clearly, you got to wash your money somehow, and hopefully they're getting clean money over there. But it's on that list for a reason.
Yeah, I wish I had that problem. But you brought up a good percentage, and that was 22% increase in the last 2 years, right? Since the pandemic started, 2 years. What caused the 22% increase? A worldwide pandemic, right? A worldwide pandemic just made things go crazy, and now they're up 22%. So be careful, because it went up quickly in 2 years because of an extraordinary thing that happened in the world. It can go down very quickly because of the opposite, because we're going back to normalcy. And so, yeah, of course, everybody wanted to jump into real estate and beachfront real estate and all this other stuff. But things change very quickly, like we've seen with the pandemic and increased values. It can change drastically the other way. So be very careful on that.
One of the agents for the new development is saying that a lot of these deals can be closed on Zoom calls simply because there's not much to see. There's not much to see.
And that's the thing is, I used to sell new home communities just like this. And we would start with a hole in the ground. And a lot of times these properties would just sell out so quickly because people wanted to be in Arlington, and there'd be lines around the sales office, or lines around the block, and they would sell like that. Everything would be sold out in about a week, right? Just because people wanted that opportunity. And then there's other times when you sit at a sales office and you're like, oh my gosh, I got to try to sell this thing out of a model that, and there's a hole in the ground, and it's a really difficult sales proposal because people can't actually feel their unit. And the one that I purchased, that was in Old Town in 2006, when we went to purchase it, it was like the top floor, 1 bedroom. We're like, all right, this is going to go up. And keep in mind also that you're paying a premium for new construction, right? So there's always going to be that premium. Are you going to be able to get that on the resale market? And when you get into that property after you have to buy it, it's going to feel a lot different than you expected. Yeah. A lot different. And so it might feel a lot smaller. And in this, the ceiling height was nice, but it felt a lot smaller than I was expecting.
I agree. Oftentimes, if you do get into new construction early, you actually, I hate to say this, but you save money from the people that buy it like a year later. Yeah. So, if let's say this project doesn't sell out, a lot of them have, but say it's like 90% sold out, 2 years from now, is the price still going to be, what it is? Tough to say.
Well, here's a great example of that. There's a building called the Residences at Liberty Center, right? It was built in 2008, and sales started in that 2008 timeframe. And if you went under contract in 2008, you were under contract for a lot higher price than when the sales stopped in 2010. 2010, you got a much better deal. And there were a lot of people complaining that, hey, man, you signed a contract. You signed a contract. And so go look at the values of different buildings of when they purchased and when sales were done. And there could be drastic differences. So that's all I'm saying is like, listen, hey, everybody's super happy right now because the market is crazy and everybody's making money off of their properties. But man, I've seen it change, and I've seen it change quickly. And a lot of people can lose a ton of money. So just be careful. Don't be stupid with your money, and watch these markets, because right now we're in extraordinary times. I've been doing this 20 years. I've never seen anything like this. So this is just a small blip in the radar.
Yeah, and the Dubai market, they're talking about $5-6 million condos, but obviously in our market, a little more relatable. I mean, we still see delays, we still see projects not sell out, so definitely good advice to heed too.
Yeah.
All right, guys. Well, that'll just about do it for another episode of the Shawn and Matt Show. Be sure to hit the thumbs up button if you haven't already. Subscribe if you're watching on YouTube. Leave a review if you're listening on Spotify, Apple Podcasts, or your favorite podcast player. I've never asked for a review.
Yeah.
We got like 4 downloads the other day. I was pumping my fist.
That's right, baby.
Yeah,
That's
4.
good.
Next is going to be double digits, baby. All right, guys. Thank you so much for watching. Until next time, we'll see you then.
Take care.